So good morning or good afternoon or good evening, depending on where you're hearing us from. So my name is Bunmi Olufeko. I work with Service Assurance. I work with Union Bank with the Service Assurance team, responsible for managing, improving the bank processes, and also looking at the whole service strategy for the bank. So I'll just kind of start from leverage on what Bindesh has been saying since. If you look at this bank, Union Bank is about 100 years old bank, and we've gone through a roller coaster in terms of our journey. Sometimes in 2009, there was an intervention by the Central Bank of Nigeria in Union Bank, and which led to us having new owners and new investors in the bank. And that's when the transformation journey actually started. At that time, we looked at and asked ourselves, what is the future of the global banking? People were talking about digital, people were talking about self-service, people were talking about leveraging various emerging technology at that time. But we realized that we needed to have a baseline, we needed to build a foundation which we can eventually tap into all that changes that's going to come about, and then be able to meet the customer's expectation. As you know, this is a evolving thing in terms of expectations are always changing, and as an organization, you need to keep ahead of customers' expectation. So at that time, this was just a big picture for the bank. We had low capacity utilization, inefficient processes, high volume of complaints. There were a lot of poor customer experience, which definitely was as a result of the processes and how at that time we were serving our customers. So I mean, the journey for the bank, like I said, started with the capitalization of the bank, and then putting in place a strategic, having a strategic map for the organization. And then in 2015, actually the transformation itself in terms of the people, the environment, all started in 2013. By 2015, we had gotten to a state where we said, okay, we needed to re-energize our brand. We're talking about being a simpler and smarter bank, and that means that we must have very efficient process as we go along. So we started our journey, our process journey, in terms of looking at our business process and asking ourselves, how do we deliver our service to our customers? First, we had to start from level. We also had a plan. We called it level 1, level 2, level 3, and level 4 processes at that time. Level 1 for us was clear documentation of our processes, standardization across our branches. At that time, we had over 300 branches scattered across Nigeria. Clearly defined processes, clearly defined KPIs output in line with customers' expectation, understanding what the voice of the customer is, ensuring that we're building processes that are meeting those expectations. And these were purely manual processes, ensuring that everybody knew what they had to do, building process matrix and all that, a responsibility matrix. The next level for us was to say, okay, how do we now start to improve this process, automate the process, where we looked at a lot of manual activities that we had and said, okay, how do we automate this process across? And then one of the first things we did then was to embark on our centralization journey. Now, the centralization journey was as a result of us looking at how utilization level across the bank. We wanted to do more with less. We wanted to be able to, because we knew that we're going to be growing our customer base, we didn't think it was right for us to keep growing our costs as the volume or number of customers that we had was increasing on the daily basis. So we need to look for a smarter, centralized process, and that's where the whole shared service concept started from. We just didn't take the existing process and say, look, let's centralize it the way it was. We had to see how we're going to improve on it. So, and then we started applying the Six Sigma methodology in terms of clearly identifying the waste that we have within our processes, identifying the non-value adding activities, taking them out, and building a more efficient process before we now went ahead to automate. Because what we realize is that if you automate a bad process the way it is, you still get an output that customers will not be happy with. So the whole BPM approach was just to design the process the way it is after the improvement has been done, look for deploy those processes, go through a phase of testing, proper testing of those processes to ensure that the outputs that we're getting out of this are in line with our own strategic objectives. So we use the BPM approach, having a design phase, having a testing phase, execution phase in terms of having proper KPIs for those outputs and ensuring that they are aligning. So as the outputs are doing well, we have a measurement strategy in place to ensure that whatever it is that's coming out of those processes, the output of those processes are continuously meeting customers' expectations. And then when we have a gap, we can understand what the root cause of it by going through the whole phase of going back through those old phases and seeing how we can further improve, take out the manual activities, automate, and then generate output all over again. We had to make this an enterprise thing in terms of getting everybody involved from top management to bottom. So there was a lot of collaboration with the risk side, process owner, analyzing, getting input from customers, so that all these things will go straight into the process in such a way that you can be sure that the business objectives have been met, because at the end of the day, we're here to service the customers, and then whatever the output of our process is what our customers are buying. But first, we had to look for a partner to do this with. So there was a lot of market research in terms of the best workflow for us in this market today. Who do we engage with? Who do we partner with? Who has done stuff like this before? I mean, in terms of the flexibility, because you need to look for a system that is very agile, a system that you can, because customers' needs and are always changing, and the pace at which they're changing, you need to be able to also make changes to your application so that the outputs are, like I said, are always meeting customers' expectations. And we went through a proper vendor selection process before we eventually ended up with NewGen, and then at that time OmniFlow, before we further upgraded to IBPS. So that's when we started the centralization project, and then we started then with account opening. We centralized account opening. At that time, we were doing about, initially when we started, maybe about 400 accounts on a daily basis. But by the time we started, we started with the level 1 process where we automated on the workflow, and then we went and updated on the third-party application. And then within a few months, we integrated the workflow with the banking application. And then we had serious improvement in terms of the efficiency. We probably had about, initially we had about 70 people opening about 400 accounts. By the time we moved to a level 2 process, we had about 30 people opening close to about 2,000 accounts on a daily basis. So eventually we moved all other processes onto the platform. We had the maintenance, we had funds transfer, dispute resolution, debit card, loan, all that was moved onto the central, to the CPC. And one of the things we quickly discovered was that our unit processing costs started to go down. So as an organization, we track our cost to serve for each of our processes. And then as we went into that centralization, we realized that we were doing more with less. So even though the number of customers that we're serving and we're reaching out to was increasing on a monthly basis, the cost of processing those transactions remained stable, and in some cases was going down. And then these are some of the benefits that came out of them. Initially, we're opening accounts in 3 to 4, 5, and sometimes as much as 7 days, because we had various applications. We had the banking application, we had the signature application. We had various applications that we had to do things on different applications. But now we had one central application where everything was done. We could, within a few hours, 90%, 95% at that time of our accounts were open under 24 hours. And today they were open. They are now open in less than an hour, depending on the volume coming out of there. Our cards, we were able to do cards in 30 minutes. Retail loan process dropped to less than 3 minutes. Generally, on all fronts, we were able to do more transaction with less manpower or less resources. So also from a growth perspective, today we have over 2 million active mobile customers from about 11,000 we had in 2012. We have about 700,000 online banking customers. We run about 200,000 account maintenance coming out of that centralized process with just a few people, because those processes are automated. And as we were going on, we were further improving on the process depending on feedback from customers, taking out activities within. We just unplug an activity, and then the time becomes shorter, and then the efficiency goes up. And then we can see it in the output in terms of our NPS and CSAT that we're tracking. If you look at 2018 compared to 2019, and I didn't provide the data, is not here, but consistently from 2014, 2015, the volume started to, our NPS number started to go up. Our customer satisfaction index started going up. In last year, 2018, for the first time, we were ranked as top 10 in the KPMG customer satisfaction rating. We're actually number 8. Next level for us was now to say, how do we combine these BPMs with and also an emerging technology at this time, the robotic process automation. If you look at a lot of the activities, there were a combination of manual and system activity that was delivering the output. And then we said to ourselves, how do we further reduce the manual activity by using robots? In 2018, we were the first in this industry to launch RPA for ATM reconciliation. And then the cost saving to the organization was quite huge. The impact on customer experience was fantastic. We became #1 bank in Northern Us in terms of our ATM became the preferred ATM in this industry, because customers know that even if they do a transaction at ATM and there's a failure, the speed at which those transactions will be passed into their account was quite commendable. So we further went ahead to say, okay, what other processes can we? And then for some of the processes that I've highlighted in the earlier slides, we're now using RPA in combination of the workflows to further improve the efficiency and reduce our cost to serve, which is our unit processing costs. And then since if you look at the CSAT for those processes that we're currently using RPA, you can also see that the trend is also on the upward movement. Next level for us as we deepen our BPM, RPA, deepen our BPM and RPA, is also to look at the digital space and how do we further, because now we have the foundation on which we can grow. We have a BPM, we have a workflow solution, we have an RPA supporting it. The next thing is to see how do we transfer some of these activities to the customer in terms of having those self-service, having it on their mobile application, being able to start open account from your mobile, and then it flows into our BPM solution, and then it is processed back end. Or some of them go straight through, or for some of them we use the RPA to complete the transaction. And then that's the next phase we are in now. So we are identifying those critical processes, those ones that have major impact on customer experience, and on customer experience or customer journey with us, and seeing prioritizing them on the digital digital map. This is just some of the recognitions that we've had in the last couple of years, 2, 3, 4 years, in terms of the fastest growing retail bank in the country, innovation award around some of the things that we've done with BPM and RP.